It's pretty remarkable that you're still watching crypto videos on YouTube. Most people don't anymore. The social engagement numbers for crypto channels, they really crashed. It doesn't really matter what kind of crypto YouTube channel you look at, if it's technical analysis, if it's news related, whatever it is, crypto is pretty much dead in terms of social engagement. The subscriber numbers on this channel, even they declined. Like 1 month prior, I had 50 more subscribers than I have today. So what people do is they might see a thumbnail of a crypto YouTube video, they click on it, and then they simply just say, I'm gonna unsubscribe from this. I don't want to have anything to do with this anymore. Crypto is dead. I don't want to lose even more money, right? The money that I might have lost in FTX, the money that I might have lost on other platforms, or simply just by holding Bitcoin or any crypto for that matter. So it all went down, and people simply had enough of it. Now, a big question in the end is, can Bitcoin at least, Bitcoin and maybe Ethereum, recover? Is there a path to recovery? Are there still strong believers in all of this? Because the problem is, even the long-term models, a lot of long-term models where people put their hope in, they are now starting to break. And one of those models, for example, is the 200-week moving average. So over here, we see Bitcoin's long-term price, and we see on the horizontal axis a logarithmic scale. So each horizontal line here is a 10x from one another, right? From 10 to 100, from 100 to 1000, etc. So this chart starts where Bitcoin was just a few dollars and goes all the way to today. And we see that even after the Mt. Gox crash, the Silk Road crash, Bitcoin was able to somewhat stay stable around that moving average, the 200-week moving average. Also in the 2018 crash, after the ICO boom, Bitcoin was able to not go too low and not be like close a week below those 200-week moving average values. The Corona crash also had us just very briefly below this moving average, and we bounced back off. But now this model has broken. Now we are significantly under the 200-week moving average, which is currently at 24,000. Now we are at 17,000 for the price of Bitcoin. So this is definitely not very encouraging, right? If you believe in something like this, you thought you were buying low in June of this year, simply just to then see again another 40% drop, right? Why would you be still interested in all of this? I can totally understand this. And this is not the only model that's breaking, right? For example, look here at the logarithmic regression. It's currently loading. There we go. Here we see, right? It's a pretty good model in the past as well. It encompassed all these peaks, right? These mania peaks. The recent peak wasn't really reached, right? We should have otherwise gone to 100K, which we did not. So, but it was in the end, it still encompassed the price action relatively well. But when we look at the floor is now completely, it's not really following anymore, right? We are completely out of this channel. And the model pretty much broke now as well, right? You can't expect anymore that we directly bounce back up from here after we've already diverged that massively. The current lower bound of this trend channel is at around 49K. And as I said, we are at 17K. So when all of these long-term models are breaking, why would we have a lot of confidence, or why would we have any confidence at all to buy at these low prices again? What could turn this around? What are actually other people in the space doing? Now, the question in the end really is, will crypto ever recover again? Or should we completely forget about it and should we move to the next hot topic, maybe artificial intelligence? There's a lot of development there recently. Should we completely abandon this whole concept? And what I'm looking at is what are the core holders of Bitcoin doing? The people that held Bitcoin for a very long time, are they getting discouraged? Or is all of this volatility here actually driven simply by short-term speculation? Because obviously we had a lot of short-term speculation, right? First it was Bitcoin that went up, then it was all the altcoins and the meme coins that were traded. Is this simply just a deflating bubble, so to speak, and we are going to recover. Because in case we do recover, the potential profit obviously is massive, right? From 16K just back to the old all-time high, 70 divided by 16.5 or whatever it is. Let's see actually what that is in terms of return. So let's go to an all-time high, and we're currently at 16.5. We basically have a 4.25x for an asset, or for let's say the major cryptocurrency in this whole asset class, right? Where we could be relatively certain that it will still continue to survive for at least a while. Is this realistic in terms of returns? Is a 4.25x realistic in, say, the next 3, 4, 5, 6 years? Because if it is, then it's still, at this current point in time, an awesome investment, right? It's way better than, let's say, a real estate, or let's say stocks, etc., right? Because you don't have that much volatility encompassed in this asset. So the big question is not necessarily where are we going to be 1 year from now. The big question is simply just, will crypto recover? Is there a high probability of this happening? And if that's the case, then we can potentially put quite a lot of money behind this, right? Even if the volatility still continues to be relatively high, if we think a recovery is likely, let's say the recovery has like a likelihood of 50%, right? If we think that, then the expected value, because the return is a 4x, the expected value is still quite nice. So let's try to figure out what are actually the core holders, the core believers currently doing. And for that, what I like to look at are two different charts. One of them is a simplified version, one of them is a bit more complex. Let's start with a simplified version first. This here is the 1 year plus HODL wave. Okay, so this is this chart here in orange, this line here in orange. And what does this line show? The line shows what percentage of Bitcoin has not moved the wallet for at least 1 year. So it has been dormant for at least 1 year. In other words, what percentage of Bitcoin is not really actively being speculated on, but is simply just staying in the wallet, hoping for a better time in the future and being potentially long-term investments, right? Or at least medium-term investments for several years. This is what this chart is showing. And why is this so important? It's important because when the price goes down, is the conviction of these medium to long-term holders, is it getting broken? Are they losing trust in the entire space? Because if that's the case, then we've got a problem, right? Then nobody believes in Bitcoin anymore, and there won't be any floor anytime soon. Because the idea of this whole concept is that there's short-term speculation of people that just try to hop on the waves, that have very little conviction of Bitcoin as a fundamental asset. But the people that fundamentally believe in it, they don't jump in and out. And you want to basically test via those waves if the conviction of those long-term holders breaks or not. If it doesn't break, then at some point in time, there will be a floor. Because those people, they might even continue to dollar cost average into the market. They might buy more over time. And at some point in time, all the speculation is out of the market, right? Right now, there's not a lot of attention on crypto. So the prices are not inflated. There's not a lot of tourists, so to speak, in the market. There's only the long-term holders in it. And if enough long-term holders continue to dollar cost average, then we will see a floor at some point and we will see the reversal. So that's the big question. And so when we look at this, right, when we look at this 1 year HODL wave, again, same long-term chart, we see here on the left axis the percent of Bitcoin that has at least been held for 1 year. Okay, so this is kind of like fluctuating between 40 and 60% somewhat, with the tendency of it slightly increasing over time, right? And what we notice here is when we are in a depression, right, in a bear market, here was when Mt. Gox collapsed and Silk Road was taken down. When the price goes down by like 80%, the long-term holders, or the Bitcoin that's held in long-term holder wallets, tends to go up. And that's probably because of two reasons. First of all, nobody wants to sell anymore for these low prices. it's kind of not really worth it. But then also more and more people might learn about Bitcoin and be interested in it as a long-term asset because it inflates less than, say, fiat currency, for example. So we see that the long-term holder balance is going up. And when it is pretty high, that means that the liquid supply, let's say on a decentralized exchange or on a centralized exchange, the liquid supply of Bitcoin is going down, right? There's less speculative supply around. And so this then means that through dollar cost averaging of the long-term holders, a floor gets built. And with that floor, we can then establish a bull market again. And once the bull market is in full swing, that's then when the somewhat medium to long-term holders are also selling. So we see a maximum percent of Bitcoin held in speculative short-term wallets whenever there's a price peak. Right? The long-term holders sold into the rally, they made money, and now all the short-term speculators that try to take advantage of this wave, they are then holding the Bitcoin for high prices, and they get very nervous when this short-term rally doesn't continue. And that's then when we are at a maximum peak of speculative money. And what I find very interesting about this is that we do not see that the amount of Bitcoin that's held in at least this 1 year wallet, it's not going down. There was a time, there was some kind of a capitulation event in 2018 where we actually saw that happening. So let me zoom in over here. So we've got here now parts of the 2018 crash. And so we see this crash here. And with that crash from 6.5K down to 3.5K roughly, we also saw some of these long-term holders selling. And some people say that this crash was actually induced by miners selling, by the crypto miners that basically spent electricity in order to mine Bitcoin. Those companies, they pretty much went insolvent at the time because the Bitcoin price was already too low in order to justify all the electricity costs. That's the story why this crash here happened. But we can see some long-term holders lost conviction here. We don't see this repeating. And that's the interesting part of all of this. We don't see how the price, that the decline of the price is causing the long-term holder wallet conviction to go down. And that's, I think, the important message of this video. We don't see that the people that bought Bitcoin for a long-term investment now suddenly think with this negative price action that Bitcoin should be completely forgotten. The people that are out of the market are the short-term tourists. It's the people that simply just watch crypto YouTube videos and try to find the next big thing to like 10x their money. But for the long-term investors, they don't really care that much about these moonshot investments or these moonshot speculations. The people that simply just allocate capital in their portfolio, that want to get some kind of diversification, say from the stock portfolio, etc. Those kinds of people, they stay. And that's super valuable. And we can also look at this in a slightly modified version or a bit more complex version. Here we have the realized cap HODL waves. So here we now look at pretty much the same thing, but we can differentiate between the different holding periods. So in order to see the exact same graph, I simply now deselect all the very short term, not the long term. I should deselect all the short term wallets. So let's do exactly that. And here now, we got the same thing, right? We see what kind of percentage of Bitcoin is held in these long-term holder wallets. And this is now at pretty much an all-time high. So the liquid supply at the exchanges is relatively small, meaning the more people long-term buy into Bitcoin, the better the floor can form. Now, when will this actually happen? That's the big question. Obviously, nobody knows. But what I think is most likely going to happen is we will very likely see strong correlation with the stock market again, with easy money, so to speak. What really pushed up crypto and pushed up, say, the meme coins was the stimulus checks, right? People had extra money and they had a lot of time at home in order to speculate. And that's when all the interest in investing and speculation in crypto really took off. Now, the situation currently is very, very different because we've got these very high inflation rates. We also have now potential job cuts and all of this. So the macroeconomic environment is way tougher now than it was 2 years ago. So the savings rate of people is also going down. People tend to save less. And I'm actually no different. I moved now from Hong Kong to Malaysia. I moved to a country with less expenses. I had now quite a few expenses simply just to set up my life over here. I also don't have a lot of money now to deploy into the market. But I hope over time, I can again save some more money and I can deploy this back into Bitcoin, because I do believe that if held for long enough, that the price of Bitcoin is likely going to increase again. People are not selling their Bitcoin. I also have sold nothing of my Bitcoin in this whole bear market. So I'm just dollar cost averaging in more and more. But right, you need money in order to DCA in, and the savings rates are currently simply too low to really push up prices much higher. When we actually look at Bitcoin relative to other assets, for example, tech stocks, Bitcoin isn't doing too badly. So let me show you this. Let's go here to TradingView. And over here, we can look, for example, at Bitcoin relative to the NASDAQ, okay, or a NASDAQ ETF. And we look at this in the last days, right? This was the big collapse, the FTX collapse, where Bitcoin also relative to tech stocks lost pretty massively, 30%. But since then, we have seen some kind of a slow recovery. How sustainable is that recovery? Nobody knows. The problem is still there are these big two potential black swans that might happen, right? The first one is Binance could go bust. Nobody knows, right? Nobody has the real numbers, how liquid they really are, but people are withdrawing funds from Binance. So it's not a the chance is not zero that Binance goes bust. There is a probability. That would definitely create another leg down, probably similar to FTX, if not more. The second potential issue is Grayscale, right? Grayscale being the very first vehicle where institutions were able to invest into Bitcoin through the Grayscale Bitcoin Trust. And currently, because of the mix with Genesis Lending, which went bust, there is now a quite big discount to the net asset value of the Grayscale Bitcoin Trust, around 50%. People expect that you can't really redeem all of your Bitcoin that this kind of fake ETF of the Grayscale Bitcoin Trust promises. So there are still potential scenarios where we could see a possible leg down. And I'm not saying that we are going to recover straight from here. But what I am saying is that the people that are long-term holders of Bitcoin, they are not selling. They are continuing to buy. And that's a very good thing. You want exactly that. You want that the long-term holders don't lose conviction. And I'm one of those people. I don't lose conviction. I still think as a decentralized way to store wealth, to potentially also ride those waves, it's great. It has a lot of inherent leverage. It has a relatively high certainty of still being around in 5 or 10 years. And that's in the end what I'm betting on. I'm betting on a recovery because everybody else is believing in it. And the only thing we need is a catalyst to have some kind of easy money again. When will this happen? Probably when interest rates will go down again. When will that happen? Probably when inflation rates aren't as high anymore. The target rate is 2%. Currently in the US, it's around 5%. But then we've got other countries like the UK, where it's the unofficial numbers are rather around 20%. So there is still potentially a lot of pain ahead. Nobody can time the market perfectly, but if you can only time it roughly okay, then you should be doing fine. And this is the whole idea of dollar cost averaging, of buying a certain amount every month or every week and simply try to buy comparatively low and then sell whenever there is the next mania happening. Because if Bitcoin is very close again to its all-time high, it's very likely that all the eyeballs are again on crypto. This is currently not the case, and you want to be buying when nobody's watching, and that's the current scenario. So yeah, thanks for watching, even though you're probably one of the very few people that still do it. I do think though this will pay off. Feel free to also check out the premium membership that's in the description down below. And of course, see you in the next video as well. Bye-bye.